Welcome to Common Sense Investing. My name is Cameron, and today I continue my journey in trying to find the next 10x penny stock. As always, I look forward to giving you introductions to good companies that also have the potential of being good stocks. Today I get to introduce and discuss some of the rewards and the risks of investing in Exco Technologies. Their ticker on the TSX in Canada is right here, and in the United States on the OTCQX. Why am I highlighting Exco Technologies? Well, Keystone Financial's Ryan Irvine was on the Money Talks podcast, which is available to listen to now, where he highlights this stock. And if Ryan Irvine is talking about a stock, I am interested because they also discuss two of the top stocks on my channel, Payfare and VersaBank. So today I need to look at, do I need to steal Exco Technologies from Keystone Financial? This was the price of Exco before the podcast. This was the price of Exco after the podcast, so it did get a little bit of a bump, and I would love to hear what you think about Exco at the end of this video. What they do is boring, which I like. Exco Technologies is a global supplier of innovative technology serving the die-cast, extrusion, and automotive industries. What does that mean? In automotive segments, they're talking about accessories and core interior trim parts. They are specialists in manufacturing, cutting, wrapping, and assembly of various interior trim components. And this is a little easier description of what they provide, everything from cargo liners to floor mats to door scuff protectors. Secondly, their casting and extrusion segment, which gets a little bit more complicated when you're talking about rear end subframe giga casting. That's a little bit more specific, as well as other die-cast products. But again, the company makes it pretty easy for us to understand. They make everything from roof rails, electronics housing, battery boxes, seat cross members. So again, vehicle orientated. Anything you need, accessories, parts, interior, or weird combinations of both for a vehicle, that is Exco Technologies. I mean, to a lot of people, this is probably a boring stock, but if you're a car guy, you probably love Exco. Now, before I get to the numbers, this is the disclaimer that the company wants us to read before moving forward. And this is always my disclaimer. I'm not a financial advisor. I'm definitely not your financial advisor. This is an introduction to a stock that I want you to go research. That's it. So why is Keystone Financial interested in Exco? They expect to achieve strong organic earnings growth primarily through margin expansion. When I calculate their numbers based on their slide deck, it looks to me like they're expecting only 6.6% revenue growth throughout the years. However, that's going to translate into about 17.5% EBITDA growth, or about 30% earnings growth per share per year up to 2026, according to the company. So again, for people that constantly tell me, forget about sales growth, Cameron, look at earnings growth. That's how you value a company. That's what I'm interested in. Earnings per share drive share price up. That's what Keystone Financial and Exco Technologies is probably telling us here. That 30% increased earnings per share year over year to 2026 is what they're banking on to make money. And this is what you get if you buy a share of Exco. Starting off with, I have to point out that 5.19% dividend currently. So if you're banking on share price increase while you wait, you're getting that dividend. $306 million market cap on 642 trailing 12-month revenue. So this is what I would like to call priced for success, whether you're looking at price to sales or enterprise value over EBITDA. $20 million in cash, $114 million in debt. Pretty small float here at 17 million with about 50% insider ownership. And again, making cash, and you can already see that 30% per year increase in earnings on their balance sheet now, and they're saying that this is going to continue until 2026. So yeah, I could see why Keystone Financial likes this stock. Revenue trending up, well, a little bit, not a lot, right? But what's really trending up is their earnings, their cash. They'll probably start paying down a lot of that debt. What's going to happen after 2026 once they have cash and can pay down some of their debt? Their ROIC is trending up, and their valuation, we shall see if Keystone Financial talking about this stock brings their valuation up. Again, not a snapshot in time when you're investing. We're looking at historical trends and predicting future ones. This company, Exco, is definitely having us look at invest today for 2026 numbers. You get a dividend, we're going to grow our earnings, and then we'll see what happens after that. This is definitely a slow moving stock, but if Keystone Financial likes it, I like it. My name is Cameron. You've been watching Common Sense Investing. As always, thanks for your time. Good luck investing.